Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday here, making it a few minutes past 1100 UTC. A really big shout out to everybody watching this live today, as well as everybody that's been watching it on catch up. Thank you all for your wonderful messages and feedback from the show as well. Obviously, it's been a pretty, turbulent couple of weeks in the market. So we're going to kind of decant where we are at the moment. We're going to check over our key levels, update our trading plans, and move forward from there. Apologies, a little bit of flu at the moment, so probably sounding a little bit croaky. Jojo, good morning, my friend. So one of the interesting things that I just wanted to start with was obviously the government shutdown in the US continues, all right? So that is affecting the data, or most of the data that's coming through, but we will have CPI this week, right? So interesting point. That's going to be the first real major kind of high impact news event that we've got coming in, and that's going to be at the end of the week. So, not really expecting tons for that, but it could be kind of one of two things typically happens with this. If there's been a restriction of data, I mean, the markets, typically you see an initial overreaction most of the time anyway. With the restriction of the data, there's going to be a lot of front running on CPI. I think we're either going to see things kind of revert to kind here. I think the risk bid is still very much on. If we look at the NASDAQ, for example, we saw basically reclaimed that entire week's loss from that sell-off on Friday. So last week finished very strongly, added the S&P 500. So we now need to really see if that's going to, start to flow through into Bitcoin, into more kind of riskier assets in that space as well. And that's what we're going to take a little look at today as well. Wisdom Liners, hello, mate. Ferquas, how are we doing? ICC, Craigie boy, how are we going? Apologies again, guys. I don't know why at the moment. I get everybody's actual username rather than their screen name. So apologies if I've missed anybody out. So just to kind of frame this from where we are at the moment, obviously the government shutdown is putting what we would say the cat amongst the pigeons. Now, historically, we've seen that these haven't actually been that impactful on the markets. However, we are edging closer and closer every day to new territory. All right. And within that new territory is the fact that we don't have any historical precedent for what's happened when the shutdown goes on for longer than it's ever gone on for before. And there doesn't seem to be a direct resolution at the moment. Obviously, it's going through the courts because Trump wants to fire a lot of these people rather than kind of furlough them, which has obviously been the case previously. It's hundreds of millions a day ultimately in terms of the cost base. So it's not insignificant. It's kind of counterbalancing what's going on with the tariffs. There's also a little bit of a theory that I've seen kind of banded around at the moment that the CPI is being kind of pushed in because they think it's actually going to be quite soft. So ultimately, if we do get that soft CPI print, all of a sudden it could really, really kind of, put an injection into the market in terms of risk. Now that's speculative, right? We don't know that for a fact. However, what we do know is that we do have that data coming in, and we do also have flash manufacturing PMI and flash services PMI Friday shaping up to be a real beast. And obviously the fact that that's been pushed right to the kind of close, I mean, it's not the close. The drop is coming in the pre-market for the US equity market, right? And then flash manufacturing PMI and services PMI comes a little bit later on, about an hour and 15 minutes later, which is going to make that trading session on Friday particularly volatile. So do be aware of that as we progress throughout the week. Right, okay, so anyway, moving back to the charts, all right, it probably could be a little touch of COVID, so many strains of it kicking about right now as well. Yeah, Wisdom Linus, I think we're back, but the tariff war seems to be a major barrier. I mean, the tariff war seems to be a little bit of an issue. Obviously, we've got that. There's, the shutdown probably not adding any clarity to that situation, either the ongoing kind of turbulence, for want of a better term, between the US and China in some of that. And, ultimately, it's a very, very kind of unclear landscape at the moment. Where are you really kind of backing? It's very, very difficult to say that the top is in on any of these major things like AI. AI is propping up the major indices, so the risk bid is definitely still there. The dollar's very low still and weak. We've seen a spike in the VIX, for example, which we will look at in a little bit, but nothing of major significance there. We're moving into 2026 with a huge US debt buyback coming on. We're seeing fiscal stimulus in Europe from countries like Germany, for example, with the defense spending. And if you're wondering, okay, well, yeah, defense spending, first of all, it is still spending, but it's not just that. Within the rules and regulations of doing that emergency it's almost like it is a fiscal spend, right? Not quite QE, but you are allowed to spend under the European guidance on infrastructure within your country as well, not just on defense in terms of arms. So, all of the catalysts are there to see this kind of continuation, maybe more into 2026 than people thought. Obviously people really looking at October to be this catalyst and this big resurgence month after September being pretty much the worst month. If you're looking at this from a historical perspective, right? So I think there's still some things to be decided. But for me, I think the risk bid is still very much on. All right, I think with the Nasdaq, the S&P 500, the major companies on them doing well, as long as we see a stability in GDP, as long as we see growth, and as long as we see the company earnings hold up, all right. For example, if we get Nvidia earnings and they completely tank, I think we're probably facing a bit of an uphill battle there. And then obviously looking at the labour market, if that continues to be soft, then there's not really anything that's going to stop or convince the Fed to stop cutting, right? And at the moment, the strength in a lot of these risk assets is based around that, that there are more cuts coming. Inflation isn't where, the Fed want it, but it is still under control. And, we do have, no major catalysts at the moment, but we do have a pretty shaky foundation in a lot of areas. The one thing I would want to add here as well is a lot of people, and we've continued this theme for a while, people talking about the AI bubble, right? I think when you're looking at stuff like that, it's really, really important to study historically what's happened in previous bubbles, right? Asian tigers, for example, the Japanese property boom, etc., the dot-com bubble. Now, if you look at those, it's the fact of how heavily debt funded these are, right? And which, obviously just makes the blow up that much more extreme. If you look at the AI space at the moment, it's, I think, around about 20% of that has been debt funded. The rest has been CapEx, right? And these are companies that are investing, their own capital within this. It isn't debt funded. So it's just not at that point of danger at the moment. The other thing that we need to look for in that respect, it is looking at real ROI, right? And, what you really, the recipe for disaster is, with bubbles, is massively overinflated valuations, nothing near it matching the earnings. So the ROI realized is very, very poor, and most of it is therefore debt funded. And that's where you get those mass explosions. And I don't think we're anywhere really near seeing that. It doesn't mean there's not other factors that can affect this. That's where we are. So if we just take that information and kind of decant that into a plan, it's a very, very foggy one, right? It is very confused. Speaking to the team this morning, other friends, I have the funds in London, and it's a very tricky situation. I think that's why we're seeing such a flight with gold at the moment as well. Not to mention the fact that I think historically some of the biggest gold purchasing that's gone on, the central banks, I think average are averaging about 35% more gold purchases at the moment. There's a little bit of a fear about the currency side of things, so it's a very, very good cover for that. But ultimately, it makes a pretty tricky landscape at the moment. So whenever I'm looking at that, I'm trying to zoom out. All right, I'm trying to cut away as much of the noise as possible and say, okay, well, what are those kind of leading indicators? What are we looking for here? And for me, I'm looking for strength in these markets to give me that indication that, these things are ready to go. So Bitcoin gives us a really good example here. Oh yeah, Craigie boy, it's a good point, Jojo. I thought you meant maybe I've got COVID, but if you've got COVID, Craigie boy, then get well, my friend. Be very, very careful with that. So just to update everybody, if you didn't see the plan that I updated, I put it onto Twitter last night as well, and obviously it's shared in full with members. Looking at the daily here, this was a really key area for me, right? This consolidation is broken down into two areas. This consolidation here that supported the market through this large move higher, and then this really big pump that took us obviously to the all-time highs was flushed below, right? We did get that close below. Now, when we're looking at this, the real area that means a lot to me here is this, right? And why is that? Well, you could definitely look at this area here as well, right? Because this is, there's consolidation in here that led to the move higher. But for me, this has had such a role to play. Obviously, we had this interaction with price here. We had this here as well. And this massive wick that recovered and then did step back above January's high here, all right? So where does it mean that? Well, what does it mean for where we are now? Well, there's a couple of things. We're going to look in a moment as well from a volume perspective. But if we're looking at this, we kind of got two ranges here, right? So you've got this lower range here and then the upper range here, right? So without some slightly better drawings, price getting back above January's high, right? It was the all-time high at the time. It was set in January of this year. This capped the market for an incredible spell of time. When we finally got back above it, aside from the two deviations here, this proved a really, really key level in terms of price recovering it and moving higher. We have to ask ourselves, all right, the strength of buying that's taken place, and, whether it's one massive buyer or lots of buyers, which is more likely, either way, buyers were very, very keen to step in at this level. And if I look back here and I say, okay, well, what else aligns with that? Is this consolidation here that led to this initial move. So the fact that price is back above this is promising. So I've got a really, really clear plan ahead of me for Bitcoin. So while we continue to hold this, I want to see price closing a daily candle back above January's high. On OKX here, it's at 109,998.9. Why is that important? Well, for price to step back in the upper range here, if we look, since we had the expansion from this consolidation showing us that buyers were present, all right, sellers trying to short the market here got absolutely taken out, huge move back above, and since this area has been defended. We saw the large wick down below, that got bought up very quickly. So, I really don't want to be stepping into shorting this. I would, however, have considered it had price closed below here. So this is the low of the consolidation here. This is the down move that led to the start of this, the major consolidation that led to price moving higher. If this is the consolidation, if this is the area that I expect buyers to defend, all right, then that's where you want to see hold. So the plan's really simple. If we'd close down below this, and if we still do close back down below this dotted line here, I would see that as an early sign that buyers have lost control of that area, all right? Now, if we reverse that logic, well, where are the sellers and where were the sellers last in control is here, right? So this is the consolidation. Buyers tried to step in at this level. We discussed it. This was really, really good. I really enjoyed this move because we had this large flush lower. This huge wick coming back up showed us how intensely buyers were buying up on this flush, all right? Price got back above, and actually it got back above January's high. It got back within the range, our key kind of support and resistance areas here. This looked really, really good. However, we need to appreciate that obviously we have had a major breakdown from here. So with price back above this level, retests of this we were looking to buy, okay? Now, price didn't hold this. You can see in the way it moved back, but it did come back above. With confirmation, would have allowed us to step into some positions here to trade this higher on a lower time frame, but we didn't. Look what happened. The price closed back underneath with this candle, and then look at the retest of this area, flushing price lower. So if this for me, is where the sellers are controlling, right? Meaning that, shorts from here, if the market really is looking for lower prices, if this isn't considered value and it is going to sell off, well, this is the ideal location. So if we do get a strong move above this and start to hold this area, for me, that is the safest play to start to look for long setups again. Now, I know ultimately you're buying this higher up, above 115, 100, for example. However, with these type of plays, you're either buying with conviction at range lows or you're waiting for some form of confirmation. And for me, the confirmation here on the daily is by far the clearest. If I'm looking at taking this on a 4 hour, for example, the healing powers of a very, very croaky BC today. Thank you, Craigie boy. I appreciate that, mate. What about this plan here really makes me think, okay, there's not, still the same barriers for price to get above. If you were looking to take really aggressive plays here, then I'm looking at a similar playbook, right? I'm always looking to say, okay, well, who's in control of the market at these levels? Yes, we've seen this recovery here, but of what level of significance? This is a huge part for price to get over. And if we look at what this entails, we've got this consolidation that led to the drop. We had this one above it. And then we've ultimately got the origin of the move up here. So on a daily scale, this is where we want to see price above. Now, the other thing we can say is we can see in terms of price kind of trading between this level, we have the resistance level here. So an early stage of strength would be holding this level here and looking to move up. We do want to be, obviously cautious about this consolidation here, but we can factor that in. We would just need to see strength building in here, but I certainly wouldn't be looking to take any swing positions. I would look to build this on an intraday basis and then see if we have strength coming in, pyramiding this on the way up. But, if we go back to the daily here, for me, we close below this here. That's about 105,631. Or we close above this here. They're the safest plays. We see this area here. Yeah, the shorts squeezed above. You want to see in a position where it makes them close out those positions. You're removing that resistance. And in the same vein, this resurgence that's being caused by the buyers here at the moment, price does come back and close below this area here. Ultimately, buyers are offside, and then we're looking for these key liquidity targets lower. Now, it does make sense. I like to do this anyway to start the week, but it makes sense to see how Monday's range plays out. I'm just going to show you. I'm going to take a very quick sip of tea. And then we are going to take a quick look at the volume profile here. Right, so what I'm going to do is, let's get these off the chart here. And I think actually I've got the one that I used for the show here. All right, so looking at this as the expansion here, price started to consolidate here. Yes, it's a little bit messy, but ultimately we saw deviation here, price step back in. So deviation of lows, price stepping back in again. I think if we overlay this and we're looking at the lows that are within here, is in terms of like the value area low, we can see the majority of trading from a volume perspective taking place here. It's also no secret you can see price reacting at these kind of low volume nodes here, these areas on the volume profile, if you zoom in, where you can see the lowest points of volume versus obviously the highest point, which is shown here by the point of control. Now, I know this to give you the exact precise figure, but volume traders, if you're looking at a value area low reclaim, think of it just like a standard range. Price does reclaim the value area low here, then there is something in the region of a 70, or the chances are in the 70th percentile, that price then does target the opposite side of the range, the value area high. We would obviously be careful about the point of control as well, which can become a really key target. So if we're looking at that there, and then we kind of go on and we re-add our levels, we can see the value area here. So price does start to get and manages to hold above here, then that's where I'd be a little bit more confident about being aggressive, okay? Because otherwise we've just got so much resistance overhead at the moment. It's just very, very difficult to have a high conviction play. Yes, you're getting in a bit later, but wait for that range reclaim, wait for price to step in there. If not, and you're not looking to actively short the market, if we do close below here, then I really do think price could come down, The 98.1 region is certainly going to come down, I would think, to take out these lows here. So anything 103, 101 would be the key kind of first targets, again, based on the fact that we close below this level. All right. So with that in mind, let's take a look at Ethereum. All right. On our nice squiggle chart here. All right. A very colorful one. Which anybody that knows the show, not historically really been my cup of tea, but I do think it helps for people that are maybe new to the show here. So this was just a key area we were looking. Down move, price moved higher. Yeah, this is the consolidation that led to higher prices. Price considered value within here, yeah, or in balance, out of balance, then returned to this area again where it was considered value or balance. Price then kept trying to move higher and establish a new area of value, but it couldn't do so. So then it came back down to this area. Look, buyers were aggressively defending this all the way through. We close underneath, can't get back above, price sells off. All right. So this, for me, still stands very true. We've left this on. Obviously, all these annotations are from previous live shows. We will start to clean them up at some point soon. Now this is becoming less relevant. Hey, Whack, how you doing, my friend? And Jojo, I feel like Ethan Soul make a temporary double bottom signal. Ooh, okay, yeah, like it. So as we're looking at this, and if I just zoom out from here, this remains a key area for me still. The resistance here, the resistance here, and the resistance here. Yeah, aggressive selling. I mean, look at the moves lower from these points as well. And then look what we got here. We got this beautiful, big, aggressive move higher. Consolidation, expansion, price now holding above this level, defending this, buyers defending this. Yeah, we got the deviation here, but price did step back above. So now we can see we're back at this level. All right, I'm just going to get rid of this, actually. It's not so relevant anymore. So now we're here. What exactly are we kind of looking at? Well, this, for me, still seems like, you know, the safest play here. If this is the origin of the last sell-off, we're going to look at this on the 4-hour to gain a little bit more granularity. And again, this was aligned with what we were drawing across from here. The consolidation here as price moved higher, price found zero support here. So returning to this, you can think of it like this, which is a clear way to frame it. Yeah, you're a major player, a whale, if you like, in crypto terms, or you can think of it as a whole host of people, however it kind of sits best with you. Ultimately, price was offered up here and it was bought aggressively in the nature that people were happy to continue to buy this at higher prices. Price then established this upper range here, yeah, at which price couldn't break out from it. Price was no longer considered value at that area. We then break down out of balance and then we're seeking previous value areas, right, which this consolidation here. Now, when price absolutely disrespects these and then revisits them, if you think about those major participants that were that were long here, price returns, they're in a huge amount of drawdown, price comes back to this area and then allows them to mitigate, get out, cover, or maybe even jump on the short side down here. It's a really good way to think about why we're always looking for who's offside, all right, who can establish maximum pain. Hey, Nick, how you doing, my friend? Good to see you. So this here on a weekly scale as well is a key area of demand. So that's where we're looking to position our longs from. I do like to see a more localized liquidity swept as well, like this on the daily, for example. The fact that we haven't taken out this low, well, typically means one of two things. Excuse me. It typically means that there's a lot of strength here and we see some kind of divergence, yeah, where you would typically look for a correlated asset. All right, it works a little bit better in traditional markets and that, especially with something like the S&P 500 or the NASDAQ. Where you're looking for correlated markets where one has taken the low and the other hasn't. Now with Bitcoin, it's a little bit different. We haven't taken any local liquidity here, so we are going to formulate that plan more on the 4-hour, which is how we refined it over the last weeks as well, and that's henceforth these squiggle points. So if you are somebody that utilizes the daily a lot more, I would be looking for price to establish itself back above here. I would say roughly about 4,316 and change, and follow our arrow plan here. Aside from that, looking at this here on the 4-hour, again, look, as you zoom in, you can start to see these areas of consolidation a bit more, see where price is stepping into these ranges. Price had a really nice reaction here, right? So now as we kind of zoom in and get it a little bit more granular, obviously apart from the terrible lines, yeah, I'll just do it as a box. Yeah, if we look at the key trading area here, look, this was the consolidation. There was the pump. Price failed to hold this level. Yeah, small consolidation. Price broke down, retested it, broke down. But this area has been brilliantly defended by the bulls. So now price is pushing up higher. And the plan we can see here on the 4 hour was really simple. This was the short plan that we had in place. Were we to close below the consolidation here, this would be confirmed as a deviation. Price closed down, and then we would look to short this, but only down, to where the buyers were present previously. This area is now holding. So this was the first stage, or this yellow box. It represents the breaker for me. All right. So I'm looking for that again here, which we've got. So the initial stages of recovery are there. What do we look for with this? Where you're looking at, the up close or bullish candles here. I'll zoom in for you guys. You can find lots of good information out there on breakers as well. I've got some bits and pieces out in the public domain as well. If you want some more information on that, do let me know. I'll be happy to share. But these consolidations led to this move lower. Now, those aggressive sellers here are now in drawdown, or closing out their positions. The ones that don't, if you get a retest of this area where they were getting short, allows that mitigation to get out of that position, minimize loss, or maybe even get out at break even, take the new data on board and say, okay, the market's showing a lot more strength than I initially thought, and jump on the move higher. Now, one thing I don't like about this is the fact that it's just taken place over the weekend. All right. This was the week. Yeah, we saw this come in on Monday again. And look at this. This was the Sunday pump. Everybody getting excited. And then it just bled out throughout the week. So we've had this recovery here now, but I do really want to see price look to establish itself now that the legacy markets are open. All right. And we're going to see, I think, in a couple of hours from now when the equity markets open, really how the risk picture for the week is going to start to play out. So let's see how Monday's range develops as we go. However, in terms of the reaction at this point, this was obviously overnight. This is kind of Asia session here. That's a really nice reaction in here. Price now kind of stumbling at this consolidation here. And again, if we just look higher, you're saying, consolidation here, price sold off aggressively, resistance, sold off, resistance, sold off. If again, we do look at that daily plan, yes, we can take aggressive plays down here. On the 4 hour, we need to kind of see a bit more of an established structure. And I do want to see this area hold. Okay, so I do think aggressive plays, again, the caveat here is we don't want to see equity markets selling off. We really don't want to see any major catalysts on that side down. Morning, clearing out a dusty barn in France. Absolutely awesome. 6 GSF. Apologies if you normally have a different name on the show, mate, but that's what I've got. But yeah, very nice. Tackling a little bit of rain and sunshine here in England, so a dusty barn doesn't sound too bad in France. So daily plan above here is just a lot more clear air for price to move into. While we're kind of battling through here, I would much prefer to see something like this and to be involved from down here to watch this breaker area hold, or to kind of focus on this original plan here, which would be led on a daily scale to see price back above this area here. If this is the origin of the move where the sellers really aggressively took the market back in control, it makes sense for price to get back above that and give those sellers a reason to close those positions out, obviously taking stop losses as well as kind of mitigation purposes, and for the buyers to step in which case I think then we kind of, as the arrow suggests, we're looking to target these areas up here. So let me show you very quickly. Let's take a look. I'm probably going to have a lot of stuff on the chart, but let's take a look here actually quickly. Okay, so this is NASDAQ. This is the current contract, all right? So not the NQ1. For some reason, TradingView's really been struggling with that, and we've seen it freeze quite a lot at the moment. So this was obviously Friday. Yeah, we saw the massive sell-off here. We came into the week. Price really kind of grinding its way up here through into the close. All right, we saw a nice resurgence here on Friday. So now with the markets opening, we can see this is a real kind of key point of resistance through here. If we're just looking at this purely in terms of it being localized and really focusing on the wicks, sell off, sell off, sell off from here. Nice pump into this area. Now we want to see price back above here. You know, what's good for the goose is typically good for the gander, as we would say, right? Meaning that if this is good for risk markets, which is being reflected in the indices, so these are obviously collection of, you know, especially the NASDAQ, very heavily laden with technology stocks. So it's a very good risk indicator. If the money's coming into those, as well as always keeping an eye on the Magnificent Seven, we can see down here, you know, Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. Then it's showing us that, you know, the capital's certainly there and being invested in the kind of riskier space. So the idea is that that then kind of opens up for Bitcoin as well. And that's what we want to see. Weakness in these, I think, is going to be a real struggle, you know, for crypto to fight against that at the moment. Let's take a very quick look as well at where we are with the dollar index, the DXY. So we can see holding below range low here. This has been a tricky one at the moment. There's different kind of catalysts really driving the dollar at the moment. But historically, we would look at it in the terms of whether you're a currency trader, and it did have a great correlation at some times as well with Bitcoin and crypto. You know, a weak dollar typically means it's not that kind of safe haven play that it used to be. You know, the caveat with this at the moment is, you know, there's a lot of different factors affecting this, and it hasn't had the best correlation. However, we still need to pay attention to this, right? A very strong dollar can often make it difficult for risk assets. One thing that has really been good and is something I'm always a big fan of here is the volatility index, the VIX, all right? So we're seeing this here, and this is trading well above 20. We want to see this ideally below 20 here. If we just take Bitcoin, for example. Yeah, you can see quite clearly when the VIX is dropping, and especially when it's below 20, you can see that's, you know, most of the time good for crypto and ultimately good for risk assets. A very, very tight correlation, obviously, with the NASDAQ. And we can see here, price really, really ripping here, actually on slightly rising volatility, right? Which shows a little bit of a divergence between these two, okay? Really, really key to kind of watch out for those. Now, I'm not saying anybody would have predicted Trump's tweet, obviously, last Friday on the 10th, but there we saw the huge spike here. Now the VIX is still quite elevated. While we're above 20 and this is rising, look at the pressure that it's putting here on Bitcoin. So the VIX kind of getting back down here and starting to drop again, I think would be a good sign too. And if we get those kind of catalysts, then we really could be kind of clearing the air for a bit of a crypto resurgence. So it really is about being selective at the moment. Not saying that it always isn't, but I know a lot of people have kind of been waiting for this rotation into altcoins. We haven't been getting those kind of sustained pumps as we had previously. And obviously as well, it's been pretty tricky trading most assets in truth, unless you are, you know, NASDAQ or S&P 500 trader, in which case it's, yeah, there has been a lot of up only. But even then, it hasn't been the easiest ride, believe me. That's how, you know, that's how I make up the majority of, you know, of my career is trading the NASDAQ, right? And there's always an argument that when things just keep going and they're going so strong and you've got that massive momentum behind them, you're really looking for those key signals that things are starting to cool down. But very, very difficult at the moment. And all of these kind of major bumps in the road have typically been, you know, news driven rather than for, you know, the reasons of the companies not delivering earnings, etc. So just to look here at Bitcoin dominance as well, let me just pop this onto the daily. This was the point of concern. Big red line. We've been watching this for a while. Price flushing out below this, then coming back down below this 57.71 level, which has been key, or even if you look at it at 57%. Price unable to get back down below there. We saw that massive spike, right? All the way up here to 63 in that absolute bloodbath for alts. So key thing here is, you know, for alts, obviously, is seeing, first of all, back down below here, about 58.8%. And then, you know, continuing that downward move. It just allows that capital rotation into the altcoin space, all right? And I know that's where a lot of people, and rightly so, will be targeting those supernormal gains. What I would say to everyone at the moment is, look, it's the market conditions are very, very tricky. They're very turbulent. We've seen a lot of heightened volatility, right? If you're playing with leverage in these environments, you need to be so very careful. Your job as a trader, as an investor, is to not blow up. right? Never forget that. Any day you're in the market, you're not losing money, you're probably gaining an advantage over most market participants. But your job is to not blow up. Your job is to pick your opportunities wisely. Like I say, you know, always kind of people always trying to catch that falling knife, and not just trying to catch it, but they're trying to catch it and back it with everything that they've got. You're either somebody that's waiting for that little bit of confirmation to kind of step back in, which you accept you're buying at a higher price, but you're doing so with the momentum of the market, or you're somebody that's happy to kind of average into projects, in which case I would always recommend doing that with spot. All right. I know you'll see these kind of Twitter posts and bits and pieces about people making millions and 5,000% in a day and stuff like that. It's not really, you know, that doesn't really paint the true picture. You want to keep yourself in the game, and when the opportunity arises, then you have dry powder to deploy. All right. Don't get yourself sidelined only then to watch the recovery start to take place. All right. So just kind of thinking about this and looking to finish up. I know there's a couple of things that people were looking at here. Let me just go through Asta. I know someone asked me for this earlier. And, you know, squiggles at the moment are unfortunately doing their job here for Asta. So the playbook was quite simple. We either saw a reclaim of this area, which was highlighted by squiggle number 1. Yeah, really, really simple. This small consolidation here that led to price starting to break down. We found support here where buyers ultimately broke out. So getting back above this level would then show me that sellers are weak here, or buyers are overly strong or overly aggressive, and they're managing to move higher. And we would expect a bit of that resistance to be gone as well, with the shorts being taken out. It was either that or a quick move below this area and back above it. Again, taking out leverage, taking out longs, and then resetting, and the market tends to pop. Or the current view that we have here is we did get that sharp breakdown, and we are now retesting this area as resistance. I'm not looking to actively short this. Again, I'm only interested in this from a spot perspective, but I would be happy to buy this lower. In terms of where lower, well, there's not really much lower to target in terms of price action. But if we look here, yeah, I think that's safe to say that there is the consolidation, you know, around about the 0.58 kind of level. All right. I still think if you look at the backing behind this, you look at the fact, you know, of the major players that are involved in it, I could see this having a pretty aggressive resurgence when the market conditions are right. So something I'm looking to average into. I did get rid of most of mine up here. You know, I was very honest about that. I actually felt like I kind of soft-handed that a bit. And probably got a little bit lucky because I really wasn't expecting this aggressive drop here, but I was looking to buy this back lower. And that still will be the plan here. The other one someone was asking me for here as well was stable, and this is just a bloodbath, right? If we look at this here, all the key levels we were looking at for resurgence here, we're just not getting them, right? Again, look, lost out this consolidation area here. What happened? Closed in below, really aggressively sold off. Now we're looking at the same thing over here. This was what we were looking to support. What do we say if we start to lose these areas? Yeah, that was one there. That was one there. When you lose these areas, you start seeing these bearish retests. Chances are it's moving back to areas that the buyers were then prominent. Again, look, flush through this area. Now we're only using this as resistance. So there's a really simple plan here. Is get back above these areas. All right. Back above these areas, and then look to play it level to level until we really kind of establish these and then move higher. Honestly, that's the safest play. There are going to be some brilliant outliers. We've got amazing fundamental analysts working on this all the time to look for these opportunities, to look for these good projects. But to really kind of find that space, we need to understand the macro perspective here. We need to understand the risk appetite of the market. And we need to then start to see that flowing back into Bitcoin. Ultimately, Bitcoin to kind of hold some key levels as we discussed. Then at which point we start to see Bitcoin dominance drop, and then alts can probably get their time again to breathe. Obviously, at the moment, our job is very much taking on board a lot of this new data that's coming in, a lot of the information as they're developing very quickly. Also from the geopolitical side as well, to not forget about that. So we've got our levels. We understand the plays. Obviously, you guys do what you guys are going to do. This is how I'm looking at the markets at the moment. There will certainly be people out there with varying different opinions to me, all right? This is just what I've done throughout my career and what I'll continue to do. You know, apart from that, you know, intraday plays and trading are still options as well. But again, very, very tricky at the moment with the volatility. So if you are somebody that has access to traditional markets, Forex, indices, for example, as well, and stocks, there can be some really nice opportunities there as well. But I know we have a very, very big degen crowd on this space. So, what I would recommend, and just quickly to just take a quick little update here on Solana. All right, we're just at a similar situation here where we're at areas we want to be holding as support are now also confirmed as resistance. We just wanted to see price getting above this 4-hour gap. We saw this nice pump up, created this area of demand. Price moved higher, couldn't establish above it, came back down, but found support here again, buyers stepping in. So the playbook was quite simple here. Get back above this. For me, it was really clear and obvious this gap here and small consolidation above is what was capping the upside. We wanted to see, first of all, price start to close above these. We saw the first sign of that resurgence. Henceforth, this small OBH4 just showing an area of demand with price closing above it. We never got out of the gap, unfortunately, closing back below. And then what are we doing? We're looking at the down close candles that look for the sweeps above to then become those bearish breakers. Retests, price sells off. Now we're arguing back with this area that was offering support. Again, price sells off, can't get back above. Buyers are offside here, the market sells off. So now we're looking again at price establishing itself above this. And then from here, we can look to start to make some plays higher. Not so concerned about the gap at this point. I think the liquidity is resting here and here. The gap has been rebalanced, but we do need to remember again that we did see a lot of resistance in this area. So the safest play is probably waiting for price to establish itself above here and then using that, obviously with a much better arrow, as our target play to move higher. All right, guys, look, I'm going to be back with you all on Wednesday. All right. Please do also remember, go and check out the Birb Nest Twitter page. You can go and check out my profile page as well, BC_Richfield, as well as Crypto Burb's page too, right? We're doing a crash recovery program at the moment, TBNs, which is going to be starting tomorrow. It means we're opening the premium Discord for everybody for 30 days for free. We're going to be putting on webinars, educational content. We're going to be running daily updates, loads of stuff, just to really try and help everybody get back on track as best as you can. So if you can't find that, do come and reach out to me on Twitter, all right, or Discord, whatever you use, and we will make sure we get you connected. L, have you said anything about DXY? Possible weekly range reclaim, or hopefully a big rejection. I can certainly pop back onto it. Did cover it earlier in the show, mate, but here you go. So in terms of how I'm looking at this here, yeah, we've got this kind of midline here. Price did get back above. We're now kind of underneath this here. So I actually want to see a rejection at this level here and price heading down like you're attesting to there. And then seeing that weakness, hopefully giving risk assets a little bit more room to breathe to the upside. Obviously, price really showing some strength from here could be a little bit tricky, all right, just putting a little bit more pressure on. So let's be patient. Let's see how the day plays out today. And then let's remember as well, Friday, CPI coming into the markets. Markets are an incredibly efficient vehicle at processing this information. So most of that will be factored in before we get there. But it also means that we could see that kind of turbulent week continue. If we get those clean reclaims and we get to attack it from the areas of strength, that's what we play. Until then, it's just not a market to be a gambler, in my opinion. All right. And reiterating, don't blow your account. Well said, Robin. Yeah. Definitely do not blow your account. Stay in the game, everyone, right? I know it feels like there's always that want to just go and invest and take these opportunities, but just do it from good positions where you can manage your risk and you give yourself the best chance. Just don't go all in on these things, all right? When you start and the money starts to come in, you start to build some capital, you can afford to be a little bit riskier with that capital, right? But do not take yourself out of the game early, all right? Have a fantastic week, everyone. And I look forward to catching you all around the nest, as well as on the live show on Wednesday.